Happy Friday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Friday, October 13th, 2023. Getting a little spooky here. It's that time of year. So, as always, we'll start with our executive summary from our leadoff morning note. If you want the analysis supporting these conclusions, as well as what to do about it in your portfolio, obviously you have to be a client of 42 Macro. But we'll start here. Number one, we have no idea whether Israel Hamas is the straw that breaks the risk asset bull and bond bear camel's back. What we do know is that we are still in a risk-off top-down market regime, and we received a litany of damning evidence that is supportive of our sticky inflation theme this week. Number two, in totality, the September CPI and PPI data were confirming of our long-held views that inflation would bottom at a level that is inconsistent with the Fed's 2% inflation target prior to recession, and that a recession would be required for the Fed to satisfy its price stability mandate. So far, so good. If next week's retail sales data or the PCE report on the 27th threatens the resilient U.S. economy theme in a material way, investors that went all in at the highs of this bounce in stocks will be disappointed in the weeks and months ahead. And lastly, in the leadoff morning note, I included a link to the annual Baskets from Heavens Thanksgiving drive that we participate in each year. Our goal is to feed 500 less fortunate families in the greater New York area. So definitely, if you have access to that, please click on that link and participate alongside us, because it's a big deal. Someone who grew up only celebrating holidays thanks to the generosity of others in our community, I can say that the families on the receiving end of this kindness really do appreciate it. And so we really appreciate any of you who do choose to participate. So thank you very much in advance for that. We'll transition to our cross-asset summary of sector performance, of global macro performance. We'll start with U.S. equity sectors here. S&P up 2.2% week over week, being led higher by utilities at plus 3.9%. Consumer staples, the lagging at minus 1.2%. In terms of equity factor performance, S&P up 2.2%, as I mentioned. Growth is really the dominant driver here, up 2.9% week over week. We got value only up 1.2%. And low beta up 0.5%. So low beta value investors are really pushing out of companies that may, experience incremental margin pressure in the months and quarters ahead. In terms of geographic performance, as I mentioned, S&P up 2.2%. U.S. equities, equity markets being led higher by China. It's up 3.9% week over week. We got some more rumors out of China. We got a lot of rumors out of China this week. More fiscal stimulus on the way. The biggest fiscal stimulus response we've seen to date is being mulled in Beijing currently, as well as Beijing is mulling starting a sort of asset stabilization fund in terms of supporting the Chinese equity market. So things are getting pretty dire there from a animal spirit standpoint. And unfortunately, until they really start to flex the public sector balance sheet in a meaningful way, animal spirits will remain depressed in the Chinese economy and in Chinese asset markets, notwithstanding this week's bounce. In terms of fixed income performance, the Barclays, the core ag is flat week over week, very limited dispersion. Investors across fixed income, whether it be spread products, whether it be, sovereign debt across it, both domestically and globally, investors are kind of waiting for that next cue. I think we've gotten a lot of information this week that has very much been that is very much in line with the next cues that we've been receiving over the last few weeks in terms of our quantitative risk management signals. And so it's no surprise, in our opinion, to see TLT go from up 3.3% week over week to now down to now just flat on a week over week basis in a matter of 24 hours following the inflation data that we received on Thursday. Currency market. Dollars now bottomed and starting to rise again, up 0.4% week over week. Kind of sharing that title best performing currency this week with the Swiss franc. Very different than where the world was a couple of days ago. So in our opinion, this is a pretty important signal in global macro right now. You got the Australian dollar as well as the Japanese yen down about 1% a piece. In terms of the commodity market, you're still getting a little bit of lift here in the commodity space. DBC, the broad basket, up 1.6% week over week. Commodities being led higher by precious metals, up 2.9%, and then crude oil up 1.9%. Uranium, which is a more higher beta play on the commodity complex, down 3.3%. And then as well, in terms of the highest beta of risk assets, crypto down, Bitcoin's down 4.4%. All cryptocurrencies are down, being led lower by Solana and XRP at about minus 7% respectively. Ethereum taking a bath this week, minus 6%. week over week. And then lastly, with respect to the trading ranges on my Longbow dashboard, nothing to call out in terms of overbought, oversold signals. So we'll leave you with some S&P 500 levels to watch. So at the top end of the range, we got 44.53. We actually called out that the S&P was overbought this yesterday morning, and so obviously yesterday afternoon's drawdown we saw after that median and trim mean CPI data came out, in our opinion, was very instructive, as well as and the lower end of the range is 42.56. So we'll wrap it up there. Darius Dale presenting our macro minute for Friday, October 13th. 2023. Best of luck out there. Everyone have a wonderful weekend. And obviously, don't forget to keep praying for our brothers and sisters in the Middle East. It looks like things are probably going to get a little hairy this weekend and in the weeks and months ahead. So we just got to, hunker down and do what we can to support them, both with our prayers and with our wallets. We'll keep on pushing. Amen. Cheers.